I want to save you a lot of cash, and I want to give you must-use tax breaks for small businesses. And so here's an overview I want to pay attention to. Basically, first you have startup costs. The amount we're looking at here, up to $5,000. So small business owners may take a startup cost deduction of up to $5,000 in startup costs in their first year of business. So this applies only to the first year. That's why it's called startup cost. And this cost can include everything from legal fees to employee training to market research. Not a problem. So you can only take this $5,000 deduction if your total startup costs are $50,000 or less. And if your startup costs exceed $50,000, you will see a reduction in your allowable deduction. In other words, if your startup costs are over $55,000, you won't be able to take this deduction. Then you also have home office. Okay, so when we talk about home office, basically the amount depends on the method you use. So small business owners who work from home or have a dedicated home office can take this deduction. The deduction amounts depends on the percentage of the home you use for business purposes. So there are two methods for determining your home office deduction, right? So you have the simplified method. So this method is the easiest for home office deductions. You can actually deduct $5 per square foot of your home office space, but only up to $1,500. So even if your home office is over 300 square feet, so in other words, $5 times 300 square feet equals $1,500. You can only take $1,500 as a deduction. Your home office deduction for the simplified method is the square feet of your home office times $5. So that's for the simplified method. And then you have the standard method, and this is a bit more complicated, but it really also means you can deduct more expenses. With the standard home office deduction, you will need to keep track of all of your home expenses. This includes what? The cost of home repairs and upkeep, as well as rent and utilities. So for this method, your allowable deduction will be square feet of your home office divided by the total home square feet times home expenses. So, and then you have retirement plan contributions. The amount here also, that's the third sort of deduction though. So the amount here varies by the plan you have. And so making contributions to retirement accounts is a smart move for your financial future. And there are also business write-offs. The amount you can deduct depends on the type of plan you have or set up. So this is really cool. And matching contributions, in other words, those made to your employees' accounts, are tax deductibles to a limit. By the way, boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. Another must-use tax break for you right now if you're a small business is depreciation. So the amount here, 100% of the depreciation expense. So depreciation is really a tax break that allows all kinds of businesses to write off the cost of certain assets over time. So we're speaking about fixed assets, okay? Because fixed assets, in other words, tangible assets. And if you have intangible assets, we're not speaking about depreciation. We're speaking about amortization. So when we talk about fixed assets and depreciation, here we're speaking about equipment, for instance, vehicles and property. So for most assets, nearly the entire purchase price is tax deductible over time. So by spreading out the cost of these assets over several years, businesses can reduce their taxable income and lower the tax bill. And then you have health insurance. The amount here is 100%. So small businesses can deduct the entire cost of health insurance premiums for their employees as business expenses for taxes. So to be deductible, however, employers must generally pay 50% or more of their employees' premiums. So self-employed individuals, including independent contractors, freelancers, and self-proprietors, can also deduct 100% of the health insurance premiums they pay for themselves and their families. So this is kind of cool in terms of giving you a tax break. And then we also have to think about meals. Now the meals here is a little complicated because the amount can be 50% or 100%. And the thing is that meals can also be small business deductions, but it's either 50% or the entire tab. Meals for employees and company-wide social events are 100% tax deductibles, and they are tax deductible, such as food for holiday parties. Business meals are 50% tax deductible for clients or prospects. So the meal must be business related, reasonably priced, and you or an employee must be present. So note that entertainment expenses are no longer tax deductible. They used to be. Now they're no longer deductible. So meals at entertainment events are still tax deductible if bought separately. So it's one of those things where the tax laws is a little more peculiar right now. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about must-use tax breaks for small businesses. Next, I want to talk to you about 1099 deductions. The amount here is 100%. So 1099 tax deductions can be for small business owners or self-employed individuals. So this 1099 write-offs can reduce your tax liability, whether you are an owner or a freelancer. So let's say if you hire a contractor or freelancer, you can deduct the entire cost. Okay, say you pay a freelancer $1,500 for work on your website. The entire $1,500 is fully tax deductible. So if you're a freelancer or contractor who receive a 1099 NEC, you may be eligible for certain 1099 deductions, such as claiming part of your self-employment tax as a deduction. Then you also have travel. So travel here is that the amount is 100%. If you need to travel out of town for business, the cost of getting to and from your destination is fully tax deductible. And lodging expenses are also 100% tax deductible, okay? So when we talk about travel tax deductions, we're talking about a constellation of expenses that you can actually avail yourself of. So we have things like plane tickets, we have hotels, rental car cost, we have parking fees, cost of bases, cost of taxis or ride sharing. So the primary purpose of your trip, though, must be business related, okay? You may engage in leisure activities on the trip, but business must be the main reason for the trip. You should also keep records of your business travel expenses, including receipts, invoices, or other documents showing your expenses. And for gifts, you can also actually write off gifts. But the thing is that gifts are more restricted. So the amount here is up to $25 per person. So gifts for clients, customers, and employees are deductible business expenses. But there is a catch. The limit is $25 per person each year. So promotional items with your company's name, such as calendars or pens, don't count toward that limit if they cost $4 or less. So this is kind of cool, but but you can see that you have a whole constellation of items you can write off, but there are that have limits and others with no limit. The next thing I want you to think about is bad debts. So the amount here is 100%. So basically, small businesses that cannot collect the debt can write it off and get a tax deduction. It has to be a business debt, not a personal one. So this can include loans to employees, suppliers, or customers, as well as uncollectible accounts receivables, okay? And then you have education. So when we talk about education, this is pretty interesting because you have a whole lot of things to cover here. So the amount here is 100%. You can write off 100% of your education-related expenses. So the IRS offers a tax breaks for small businesses that pay for education expenses. Now, to qualify for the education deduction, the cost must add value to the business and improve or maintain necessary skills. I want to repeat that because this is an important element for the IRS to consider. The cost, if you want to write off those education costs, the cost must add value to the business and improve or maintain necessary skills. So tax deductions examples for valid education expenses include things like you have classes, you have workshops, you have seminars, you have publication subscriptions, you have books. So it's one of those things where whether the provider comes on site or you go to a seminar or industry event, all those education related expenses are fully deductible. However, general education courses unrelated to the business or an employee's role typically will not qualify for this small business tax deduction. So again, it's one of those things where you have to look at the sector you're in. You got to look at your company, the vision, the operational structure of your company, and the history of training that your company has engaged in the past to really see whether or not it's better to have to write off education, or not better, whether it is possible. Yeah, that's the right word. Whether it is possible for your business to actually write off education expenses while filing your taxes. One thing I want to say here is that you also need to make sure that you actually validate those expenses at the state level too, though, because some expenses might be valid at the federal level, but your specific state may not validate those expenses when it comes to your state business income taxes. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about must-use tax breaks for small businesses. I want to talk to you about auto expenses. That's the next sort of expense I want to talk to you about. And the amount here is 100% or percent of vehicle usage. Okay. So small business owners can deduct auto expenses even if it's their own car. If the vehicle is solely for business use, all costs are tax deductible. If it is for business and personal activities, the standard mileage rate or actual expenses method will determine the deduction amount. So you have the standard mileage rate, and then you have actual expenses. So for a standard mileage rate, this is actually the easiest. You track your miles and multiply that by the IRS standard mileage rate. So for this year, the rate was 65.5 cents per mile. And I mean 65, yeah. For example, if you use your personal vehicle to drive 5,000 miles for business, your deduction will be $327.50. In other words, this 5,000 multiplied by 65.5 cents. So that's for the standard mileage rate. And then you have actually the actual expenses method. So this method means you track all vehicle related expenses such as insurance, fuel, and maintenance. You also track your miles driven for a business. And so your deduction amount will be the total expenses for your car multiplied by the percentage of business related miles. Okay. So we're speaking about total vehicle expenses times business miles divided by total miles. And then you have also taxes. So this is really good. So here the amount is 100%. So any business related taxes you pay are tax deductible. So this includes taxes you pay for payroll, such as Social Security and Medicare taxes. Other examples include state and local income tax, sales tax for business purchases, real estate tax for business property. Note that certain business taxes are not tax deductible, including estate and gift taxes, as well as federal income taxes. Then you also have childcare. So the amount here is 0%. So childcare expenses are generally not tax deductible business expenses. However, employers that provide childcare can get tax credits if they meet certain requirements. So to qualify for this credits, the employer must ensure childcare providers meet state licensing requirements. The childcare must also be necessary for the employee to work. Then you have also charitable contributions. Now, the amount is generally 0%. There are tax breaks available for small businesses that make charitable contributions, but that depends if you can deduct actually 100% or 25% or something even lower. Some business owners can deduct 100% of charitable contributions if it is on their personal taxes. Small business owners that run sole proprietorships, partnerships, or limited liability companies, LLCs, can take advantage of this. And then you have also 25% of the contribution is deductible if the business operates as a corporation. So basically the amount varies. Then you also have marketing and advertising. The amount here is 100%. So business marketing costs for small businesses are fully tax deductible. This includes expenses for campaigns to generate or retain customers. So examples of deductible advertising costs include ads on social media platforms, newspaper and TV ads, sponsoring events, or conferences. So to claim these deductions though, business owners must keep records of all marketing expenses, including receipts, invoices, and payments to verify the cost. Then you also have rent and utilities. And so this is kind of interesting because for rent and utilities, you're paying 100% of the cost. You are writing up 100% of the cost when filing your tax returns. So rent payments for business properties such as office, storage, or warehouse space are fully tax deductible. If you have an agreement to buy the property at some point, you cannot deduct rent payments, okay? And the property must be exclusively for business purposes. And if you use any part of the property for personal purposes, the rent payments may not be fully deductible. So this is kind of similar to the home office sort of deduction. So, or even the use of personal car, right? So everything must be related to the business. So if certain aspects of the rent and utilities are not, if certain aspects of the rent and utilities are not related to the business, then you can't really write off the full amount. So you're going to have to write off the proportional amounts that relates to the business. It's always, there has to be a proportion, always. Another must use a tax break for small businesses is actually subscriptions. So the amount here is 100%. So subscriptions you have as part of your business are 100% tax deductible. So this includes subscriptions to software services, trade publications, and online resources that are necessary for your business. And so common software subscriptions that your business can deduct include project management tools, cloud storage, accounting software. And most business subscriptions are ordinary and necessary cost of operating a company. So they can actually include membership dues as well. You also have interest. Interest, the amount that you can deduct is 100% up to 30% of taxable income. So interest your business pays on debt such as loans and credit cards is tax deductible. Your business must be legally liable for the debt. So businesses with revenue of $27 million or less can actually deduct 100% of their interest expenses. For all others, there is a limit on the tax deductibility of interest expenses. The deduction cannot be above 30% of your taxable income. Say your business has a taxable income of $50,000 and pays $25,000 on interest, you can only deduct $15,000. That's $50,000 times 30%. And you also have salaries and wages. So this is another tax break. So the amount here is 100%. So we're speaking about small business owners can actually deduct the entire cost of paying employees. So this includes the salaries, wages, bonuses, and benefits. However, salaries must be reasonable and ordinary. So in order to qualify for deducting employee compensation costs, small business owners must properly document all payments, including keeping detailed records of hours worked, pay rates, and any additional profits, and also related sort of cost. One thing I want to say here is that you need to always make sure that you are able to prove any payments that you make to employees, because otherwise you cannot really record all those costs, right? You have to be able to substantiate the benefits that you are claiming that the IRS should actually give you credit for, if you will. Next, you want to think about legal and professional fees. The amount here is 100%. So all of your legal fees are a small business owner or our small business sort of bonanza, if you will, because there are tax breaks, assuming that they are necessary for a business. So deductible legal fees can be for such things such as tax issues, discrimination claims, business sales, and so on and so forth. So legal fees unrelated to your business, such as those for personal matters or hobbies, are not deductible. You also have internet and phone. So here the amount is 100%. Phone and internet expenses for small businesses are eligible for deductions. All phone or interest usage for your business is actually tax deductible. If you use your phone and internet for both personal and business, only business related use is deductible. Then you also have business insurance. The amount here is 100%. So business insurance premiums are fully deductible. So we're speaking about 100% deductibility. This includes all types of insurance, though, including workers' comp. Okay, and all the types of insurance that you may need to run your business are fully deductible. So we're speaking about liability, workers' compensation, auto, property, and this is kind of cool. So if you want to take advantage of tax breaks, just make sure that you can either use software to really control everything, or you can just outsource the whole thing to a third party, to a professional such as a CPA, an EA, or a tax attorney to kind of help you out. Okay, but there is really important to really have a clear idea about what you can qualify for. So let's quickly wrap up today's conversation. So what are the most used tax breaks for small businesses? So you have startup costs, you have home office, you have retirement plan contributions, you have depreciation, you have health insurance, you have meals, 1099 deductions, travel, gifts, bad debts, education. So it's important to understand education. It has to be related to your business. It has to add value to your business. You have auto expenses, you have taxes, you also have childcare, you have charitable contributions, you have marketing and advertising, you have rent and utilities, you also have subscriptions, you have interest, you have salaries and wages, you have legal and professional fees, you have internet and phone, and then finally you have business insurance. Thank you so much for your attention. I really appreciate it. In today's conversation, I'll just talk to you about the must-use tax breaks for small businesses. I appreciate your attention. God bless you. I'll see you next time. Until then, remember, stay marvelous.